All right, stock market intermediate view. We're going to look at the SPY analysis for November through March. You can get this full analysis because I'm only going to look at the weekly on the S&P 500, NASDAQ, and the Russell in our stock index report. It's a daily report that Matt puts out. It's astounding. That's for level 1 and up. So if you're not a member and you want to become a level 1 member, 3 months is only $45. So go to the askSlim website and sign up, become a level 1 member, and get our full analysis on all of the indexes for just $45 for 3 months. Absolutely amazing deal. All right, so now let's switch over and look at the stock market chart. This is SPY, the S&P 500, and this big rally over here from the pandemic through the peak over here in the very end of last year, the beginning of this year, was just a monstrous rally. I call this the everything bubble, as other people do, as the market made these enormous gains. You can see over here what we had labeled as the Great Reset, Phase 1. The reason I call it Phase 1 is because I think the Great Reset is going to last for many years. Those people that are an analyst out there talking about the next bull market, well, you're going to have some bull markets that come over these years, but I think they are cyclical bull markets, and there is a secular reset going on that happens historically. And I'm going to show that in my year-end show that I'm already working on about the history that says there are many years of correction out ahead of us. But let's just talk about now through March. Here is where that peak came right over there, and we're just going to look at the cycle analysis. So what you see in here on the bottom are cycle brackets, and that gives us an idea of the energetic movement in the market. I'll blow this out a little bit again, and you can see each of these minor little cycles in here, as you can see how they trace out right here and here and here. Those are just a little minor cycle in there, and then there's a bigger dominant one and an even bigger dominant one right there. And each of those brings periods where they put in energy, or as we call this, the heartbeat of the market. There are energetic movements in either direction. When they are rallying, when there's this upward movement, you get rallies. And when there's corrective movements in here and they all come down together, we put in these yellow areas here, and that's where can be some sizable declines. You see right over here where it came down big. Here is a period of risk here, and the next period of risk is out over here in the January to March period. We have been looking for a rally to come and fail, and that's what we think is happening. Now, you've seen the market trying to get up in here these last couple days and struggling. Let's talk about where these resistances are and supports are right now. So the resistance area right here, this is 398. This is the major 38.2%. That's from the peak, the bull market peak. This is the intermediate 50%, which is from this peak right over here. So this area right in here between 398 and 405 gives us the first resistance zone. 405 seems very reasonable to us between now and when we think the peak is coming out here in January. Then there is the potential, if the rally really gets strong, that it gets all the way up into this zone between 414 and 419. This is really, in our opinion, more of a long shot, but you can see that the green projection right over here is the most extreme upside projection that we see. So right now, as you see this minor cycle right in here, this declining phase in here is fighting against this big rising phase. And momentum in here, as you see this green arrow in the reversal scout, that's a proprietary indicator, which if you become a level 4 member, you can get that. This turned bullish right over here and remains bullish and gives you this big upside energy that you see in here. So you have big upside energy right here, a dominant cycle that's pushing up, and a minor cycle that is here coming into a corrective period. When that happens, the consolidation normally is only into the minor support. That makes sense that we'll see a move down here close to 380 in the S&Ps. It's only 15 points or 150 points in the SPX index. That's not very much. Then the question is, after this correction, how much rally can you get? Can it move through what's called a VTL, a valid trend line? It comes from cyclical peaks that you can see coming down through here. Or is it going to stop in that area as we have the possibility in there drawn? So this is likely going to meet resistance in here close to 405, pull back in here somewhere near the 382 area maybe, and then get another rally here, either equaling or above that. If it gets through the VTL, it probably will have that upside spike into the 414 to 419 area. But then after that, we get into the riskiest period. Now the intermediate VIX trough, in other words, the point where VIX should be the lowest, is around mid-January. So that tells us that the peak in the stock market is somewhere around mid-January. It might be the first week to the third week of January. That's why you see these projections up to the time period that we have them here. So the minor cycle supports are down over here, and that says that it's likely that the market will begin to struggle and get into this corrective period. And we see it getting some resistance right now. But then this period in here where it makes a low somewhere in mid-December and then has another rally, that next rally is one that really gives us some sense about the strength of the market. Again, we think it'll be 405 to potentially the zone between 414 and 419 into January. If this corrective period turns out to be steeper and gets lower and even below these levels here of support under 370, that will then give us a warning that this upper track is now not likely at all. So we learn from what happens and get the messaging in the market of how the markets move in particular areas, in windows for correction or windows for advance. In this window for advance, where you had the dominant cycle moving up and the minor cycle moving up, this 15% gain was very strong. So that tells us that the market right now has strength and that this correction is likely not to come down very far, out into this mid-December area. Down into mid-December, up into mid-January, and then over here is that big period of risk out into February, March, and maybe even out into April, where the biggest risks come. And it's likely to get the stock market, the SPX, to fall below that low where it made just under 350 on the SPY, with the potential of coming down here to 320 during this time frame. If for some reason what happens is that this gets up here or through this to the top level, and then this declining phase over here does not make a new low, it will give you a sense that we are now in a period of a cyclical bull market. I don't think that's the case. That is the lowest probability. The highest probability is what I've told you about in here, and then moving down significantly into this February, March, and maybe early April timeframe, where we expect the lows to come right over here.